I guess the market has kind of come around to a lot of the concerns you have put out there, but your price target, 165, not all that far below where we are right now. How do you think the market is set up right now? Do you think it's close enough?
Thanks, Mike. So, yes, I think when you get the stock price, of course, it's getting close to our price target, but the market has sold off a lot around Apple. So, of course, there is further downside risks, further disappointment. So, what I'm looking at now is what are the next catalysts for Apple. And the one thing I see is that all these data points, all this promotional activity by Apple, news flow from the supply chain, everything says there is an air pocket. There is a lack of demand for the iPhone. It's very interesting to see Apple trying to convince you with money to refresh, to replace your phone. And remember what we discussed, this idea that people have replaced their phone last year, they're not replacing it this year. And so that is going to turn into a very, very low guide for Apple for the March quarter. And if I look at my expectations now, they stand 13% below consensus expectations. So I still expect a lot of disappointment and the stock to suffer further below that. And then one thing you mentioned, I think that is important, is that now we enter into very uncertain economic times, and Apple is a consumer discretionary device. It's very highly exposed to emerging markets. So yes, it's on the front line of a potential economic turbulence.
Tom, you still have a buy rating, $290 price target on Apple. Why are you sticking to that? Are you sticking to it?
I'm most definitely sticking to it. So thanks for having me on. The way that I see Apple now, the dependence on the iPhone, as it was 60% of sales in the last fiscal year, and slowing growth for the smartphone market in general, that's nothing new. Why I'm bullish is the company's ability to raise the average selling price of their device. If you look, for example, the least expensive new iPhone, the XR, is 7.5% more expensive than last year's least expensive device, the 8. So having the ability to generate sales growth while selling fewer units, and then having a very favorable environment as far as U.S. corporate tax code to return cash to shareholders via buyback and dividends, I think the Apple stock is still a buy here, despite concerns on unit sales for the iPhone.